Welcome back to the third and final segment of today's Tax Time Show. In this episode, we've been learning a lot about home office deduction, and all that knowledge and guidance and advice is coming from Mr. Ajay Kumar, Sai CPA firm located here in state of New Jersey, provides full-fledged accounting services when it comes to personal and corporate accounting from A to Z, including starting up a company and setting up a company and registering companies. So Mr. Ajay Kumar brings a lot of experience, and of course, we've been learning a lot from him. Home office deduction, that's our topic today. What about, you explained very well in the last one or two segments, who can deduct, how much can deduct. What about rental property? If somebody has a rental property and then someone tries to, also claim a deduction on using rental property as office or something like that.
So if you have a rental property, it's considered as a passive business. If your home office is only collecting the rent, that's really not a business. I mean, it needs to be used regularly, exclusively. If the only thing you're doing at your home office is sending a monthly invoice and collecting the rent, this is really not a business. So just refrain yourself, don't go out of your way to claim certain expenses. I mean, don't stretch the envelope too far. Home office is a good expense if you have a business. But a lot of times we get into this situation when you have an LLC and the LLC owns a rental property. And the only thing the LLC does has one rental property collecting the rent or couple of rental properties. So if you are using this home office just for a couple of hours a month, that's really not a home office.
Absolutely, and one should not do it.
Absolutely.
You can be, you need to use your head, and you can go up to certain far, you can stretch it up to certain point, but then after where it doesn't make sense, then you should not play around with the taxes. All right, I understand you have a chart.
Absolutely.
In this episode, which explains very well when it comes to home office.
Absolutely. So we'll show the chart for our viewers. As you can see on the chart. So you start is part of your home used in connection as a trade or business. If not, then you don't have deduction anyway. The second thing you check, are you using the part of your home as an employee? We just discussed as an employee, W2 employee, unless you are a statutory employee, you cannot claim it. So if you are an employee, if you say yes, no deduction. If you are not an employee, if you say no to the employee, then we say if it's used for regularly or exclusively. If it's being used as regularly and exclusively, then you move to the next check point. If it's a principal place of business, do you meet clients, patients, customers in this area? Is it a separate structure or at least separately identifiable space? These are the criteria that the IRS is going to be looking at before they allow your home office expense deduction. So this chart helps you see through what you can claim and what you cannot claim.
Absolutely, very well. Hopefully that will explain to our viewers very well. How do you claim?
Absolutely, I'm glad you reminded me.
That is the main thing that we need to discuss before we go on to the next one.
A lot of people don't really know it. A lot of people try to claim the home office expense on Schedule A and they don't really find that segment, that section anymore, and they miss it. So home office expenses are claimed on Form 8829, 8829, and you can claim this form again if you have a W2 and you are working for somebody else, you don't use it. But if you have a small business, you are self-employed, you are a statutory employee, please use Form 8829 to claim home office expenses.
Okay, very well. Now, can we quickly take a couple of emails?
Absolutely, please.
Let's see if we have time, because viewers, thank you so much for all your emails and everything. Texttime@tvasiausa.com. That's our email ID for any emails, any questions that you have there, you want to send it. All right, here is, and obviously we don't reveal their names, but here is one individual watches our show and appreciates it. Person lives in one of the tri-states area here in New York, New Jersey, and Connecticut, and own a concierge in a mall and a single member LLC in that state. Received the funds under PPP in the month of May, and most of it was used to pay up bills and rent and etc., which is a good thing to do. That is exactly the right thing to do. The mall is currently open with limited hours. However, there is no enough traffic to be able to pay the bills and take the draw, obviously, and the financial stress is unbelievable. Person wants to know if they can still apply for an unemployment benefits under PUA at this time and make it effective from March 15 when the mall was first closed.
It's a great question, and it's a very, very common question. Gist of the question is, I have a small business, I got the PPP funding, I used the expenses, the PPP funding is all gone, but the intent behind the PPP funding was to run the payroll. but can I still claim unemployment if I actually receive the PPP funding? The good news is the answer is yes. So PPP funding guidelines have been changed. As we covered in our last segment, instead of 8 weeks, it's been made 24 weeks.
Yes.
So you can still use the PPP funding and you still have enough time left to claim unemployment and PUA benefit. Each state is different. In the state of New Jersey, in most states now under COVID-19, you are allowed to claim unemployment. You don't apply for PUA separately. Once you qualify for the state unemployment, you get qualified for the PUA benefit as well. As we stand currently, the PUA benefits are expiring on July 31st. So if you qualify for it, please go ahead, apply it as soon as you can.
Okay, very well. And the last question, one line question, short answer. They want to know, what do you think of HEROES Act? Will that come in effect? Will that pass?
I'm sure HEROES Act will pass. I mean, it's not, I have absolutely no doubt about it, but it wouldn't pass as it stands currently. See, the PPP Flexibility Act that was passed last week, it was part of the HEROES Act initially. So what they are doing is, instead of passing the HEROES Act as is, they are picking up the segments, they are modifying the segment and passing those segments separately as it becomes necessary, as it becomes urgently. So a lot of sections, a lot of segments in the HEROES Act will be passed.
Okay.
Not in the current form though.
Okay, sounds good. Very good. Thank you so very much, Ajay Kumar. Very well. Very informative show.
Absolutely, it's my pleasure.
Details regarding home office deduction. Until we meet again next time in this Tax Time show, you do take care of yourself. Have a happy and very enjoyable tax-free days ahead, and let's hope that HEROES Act gets passed very soon.
Absolutely.
And every week we bring you the latest that you need to know. So next week we'll have more latest information from Mr. Ajay Kumar of Sai CPA Services. Any question? Text time at tvasiausa.com. I'm Sanjeev Pandya. Until we meet again, so long.